Welcome back, everyone. I am absolutely thrilled you're here today. We're going to tackle something that seems super intimidating, but is actually incredibly fascinating: reading financial charts. Seriously, if you've ever opened up a stock tracker or a crypto app and just felt instantly overwhelmed by all that visual noise, you are definitely not alone. But stick with me, because by the end of this explainer, you're going to see those charts not as a chaotic, stressful mess, but as a really clear, unfolding story.
Right, so let's just address the elephant in the room. When you first glance at a financial chart, it genuinely looks like some kind of alien language, doesn't it? Just a barrage of jagged lines, flashing colors, and weird symbols. You kind of feel like you need a PhD in finance just to figure out if a price is going up or down. But here is the secret, and it's a real game changer. It only looks confusing until you understand one single, beautifully simple shape. Once you decode this one shape, the entire alien language just starts to translate itself.
So to make sure we keep this super structured today, here's our roadmap. 1. Demystifying the Japanese candlestick. 2. Anatomy of a candlestick. 3. Common candlestick patterns. 4. A practical reading example. 5. Avoiding common beginner mistakes. And 6. Important rules and a disclaimer. Let's jump right in.
Part 1. Demystifying the Japanese candlestick, the fundamental building block of price movement.
Okay, so a candlestick is basically just a visual snapshot of price movement over any time frame you pick. Maybe that's 1 minute, maybe it's a whole day, or even a week. But here's the thing. Regardless of the clock you're using, every single candlestick relies on 4 critical price points. We call this OHLC. The open is the price at the very beginning of that time frame. The high is the absolute maximum price reached. The low is the absolute minimum, and the close is where the price finally settled at the end. Those 4 data points are literally all you need to build the shape.
Part 2. Anatomy of a candlestick. Breaking down the shape. It really helps to think of a candlestick as a dramatic tug-of-war between buyers and sellers. First, notice the thick rectangular part. We call that the body. This shows the main battleground, the distance between the opening and closing prices. A long body? That means strong pressure from one side. A tiny body? That suggests total indecision. Next, you have the wicks. Some people call them shadows. These are the thin lines sticking out above and below the body. They represent the absolute highest and lowest extremes reached during that tug-of-war. And finally, the color. The color gives you an instant, split-second read on who actually won.
This color difference is brilliant because it's just so intuitive. A bullish or green candle simply means the closing price was higher than the opening price. The price went up. The buyers won that round. On the flip side, a bearish or red candle means the closing price was lower than the opening price. The price went down, meaning the sellers took control. In just a glance, green means up, red means down. Simple as that.
Part 3. Common candlestick patterns, translating shapes into market sentiment.
Now, when you start combining these parts into specific shapes, they give us incredible clues about market momentum. It's kind of like reading words instead of just spelling out individual letters. Take the Doji, for example. It has a tiny body with wicks on both sides. This shape screams market indecision, a total tie in the tug-of-war. Then we have the hammer, a small body up near the top with a super long lower wick. This often signals a potential reversal after a downtrend because sellers tried to push it way down, but buyers literally hammered it right back up. Conversely, a shooting star is a small body near the bottom with a long upper wick, which can mean a potential reversal after an uptrend. And lastly, the engulfing pattern, where a new body completely swallows the previous one. That is a massive sign of a major momentum shift.
Part 4. A practical reading example, putting the theory into practice.
Okay, theory is great and all, but let's actually look at some raw data so you can visualize this in real time. Imagine the morning bell rings and the market opens. Step 1. Our stock opens exactly at $50. As the day goes on, the buyers push really hard. Step 2. It surges all the way up to $55. That 55 is our absolute high for the day, which forms the tip of our upper wick. But wait, the sellers strike back. Step 3. They push the price all the way down to $48. That's our low, creating the bottom of our lower wick. Finally, the dust settles and the day ends. Step 4. The stock stabilizes and closes at $53. Because that close at 53 is higher than our open at 50, our thick rectangle body spans exactly from 50 to 53, and we color it green. Boom! Just like that, you've perfectly read a bullish candlestick.
Part 5. Avoiding common beginner mistakes. What not to do when reading charts.
Knowing how to read a candlestick is incredibly empowering.
But listen, as a beginner, it is super easy to get overexcited once you learn a few of these patterns and fall right into some very common, very costly traps. First, please do not rely only on candlestick patterns while totally ignoring the broader market context. Things like overall trends or support and resistance levels. Second, beginners often try to trade every single pattern they spot without waiting for confirmation from other signals, like trading volume. That's a huge mistake. And third, don't misread a pattern's significance based on where it's located. A hammer pattern at the very top of an uptrend means something completely different than it does at the bottom of a downtrend. Basically, a single pattern is rarely, if ever, used in isolation.
Part 6. Important rules and disclaimer, wrapping up safely.
So to wrap this up, candlestick analysis is a wonderful, highly visual way to interpret market sentiment, but we have to remember it is just one tool in a massive toolbox. It is absolutely not some magical cheat code for endless wealth. Everything we covered in this explainer today is for educational purposes only and does not constitute financial advice. Candlestick patterns do not guarantee future price movements. I can't stress this enough. Always practice on a demo account first before you ever risk a single cent of your real, hard-earned capital. Now, if you found this explainer helpful, go ahead and hit that subscribe button. Better yet, I challenge you. Open up a demo chart right now, find one of the patterns we talked about today, and let me know in the comments below exactly what you spotted.
Ultimately, what you are looking at when you view a candlestick isn't just math, and it's definitely not just arbitrary lines on a screen. You are literally looking at human psychology unfolding in real time. It's fear, it's greed, and it's indecision all printed right there in front of you. So the next time you look at a chart, ask yourself, are you just seeing colors and shapes, or are you finally reading the hidden story of the market? Thanks so much for hanging out with us, and we'll see you on the next explainer.